Straight ahead, key market insights from Entry Point Wealth Management founder Chris Ward. Still to come, an in-depth overview of crypto's breakout over the past week from analyst Ray Salmo.
And welcome to Market Movers Midday, live from the floor of the New York Stock Exchange. I'm Johnny Fernandez in for Remy Blair, and it's 12 p.m. here on the East Coast in New York City. And now a check on the markets. We can take a look right now. We can see that the Dow is slightly lower this morning. It is in the red. We can see it's down about 100 points. And when we look at the NASDAQ also slightly lower. The NASDAQ roughly dropping about 90 points. And when we look at the S&P 500, it is flat this morning. It is dropping about 7 points. And when we take a look at the Russell 2000, we can see that the Russell 2000 is on the lower end. We can take a look at that and see that it is down about almost a quarter of a percent, excuse me. And when we look at the NYSE Composite Index, also flat this morning. And as for other areas in the market at this noon hour, we know that the Treasury yields are inching on the higher end, the 10-year above 4.65%, the 30-year above 5.18%. And when we look at oil is rebounding from earlier losses. WTI pairing losses above $80 at around $82 a barrel this morning. And Brent slightly on the lower end at around $88.40 this morning. And in crypto, Bitcoin lower and at around $78,000 this morning. And Ethereum on the higher end this morning, roughly at around $24.50 this morning. And all eyes this morning on some breaking data news. PCE coming in slightly hotter than expected last month. July PCE coming in at 3.7% year over year, right above the forecast. But this was in line with June's reading. And on a monthly basis, PCE coming in at 0.2%. Now, this was right above forecast and an uptick from June's slight decline. And core PCE, which removes food and energy, was right in line with the forecast. And on a yearly basis, core PCE coming in at 3.3%, matching forecast and June's reading. And on a monthly basis, core PCE coming in at 0.2%. Now, this was in line with June forecast and an uptick from June's reading. And Q2 GDP showing the U.S. economy expanded at a slower pace last quarter than in the first quarter of the year. Now, the second estimate for the Q2 GDP coming in at 1.5%. Now, this was in line with forecast and matched with the first estimate, but still lower than Q1's 2.1% growth rate. And taking a look at personal finances, personal income growing more than expected last month. July personal income rising 0.4%, and that was above the 0.2% expected and June's reading. But personal spending growing at a slower pace, consumer spending coming in at 0.2%. Now, this was above forecast, but below June's 0.3% advance. And now turning to durable goods. Now, orders for July climbing to the 1.1% on a monthly basis. Now, this was more than double the forecast and also a sharp rise from the month of June. Now, stripping out transportation, orders coming in at 0.4%. Now, this was just shy of the forecast and a much slower pace than the month of June. And excluding defense, orders rising by 1.3%, a 1% faster pace than the month of June. And now for a quick look at the stocks moving markets this morning. Now, Meta shares moving higher after it agreed to a landmark settlement on social media addiction and minors. Now, the deal is worth up to $16.68 billion and resolves massive litigation brought by 29 U.S. states, including the state of California. Now, the parent company of Facebook and Instagram was accused of deliberately designing its platforms to be addictive to teenagers and to children. Meta and other social media platforms like TikTok and YouTube continue to face thousands of additional personal injury lawsuits filed by school districts, parents, and individual plaintiffs. And take a look at NVIDIA ahead of its Q2 earnings report today. The tech giant is on the lower end ahead of its report. Now, it's expected to post over $92 billion in revenue and adjusted earnings per share of $2.09. Now, the data center revenue is also expected to top $85 billion. The stock ended its longest losing streak since 2019 yesterday. And while it is lunchtime here in New York, it's 11 a.m. over in Chicago at CBOE. So now let's head over to our Mark Payton, who is live from the CBOE trading floor. Mark, how's it going today? And kind of go ahead and catch us up on the trading action over at CBOE at this hour.
Yeah, hey Johnny, how you doing? Here at SIBO, the S&P 500 is hovering right on that flat line. We're seeing some movement, little spikes here and there, but nothing major. The VIX is around 15.4. It's up about 1% this morning, so we're seeing a little more caution, but volatility is still relatively calm. And small caps are under some pressure with the Russell 2000 down about 0.25%. That one's been just kind of going down and staying down. So overall, a pretty muted market as we move through the morning.
All right, Mark, so we know that NVIDIA reports after today, after the close. So what do prediction markets bettors think will happen with the tech giants report?
Yeah, well, bettors are pretty confident going into tonight's report. On Polymarket, bettors are putting the chances of NVIDIA beating its earnings benchmark in the mid to high 90% range. I've seen it at 98%. That benchmark is about $2.08 a share, so expectations are very high going into tonight's numbers. And that is really what makes this interesting. With expectations this high, the question may not just be whether NVIDIA beats, it's whether NVIDIA beats by enough to impress investors. And NVIDIA has become such an important part of the AI trade that this report could have an impact well beyond just NVIDIA's stock. And NVIDIA is not the only big tech name reporting after the close. Salesforce also is reporting tonight. On Polymarket, bettors are putting the chances of Salesforce beating its earnings benchmark in the mid 90% range. That benchmark is at $3.27 a share, so prediction markets are clearly leaning toward beats from both NVIDIA and Salesforce. With expectations already this high, what these companies say about the road ahead could be just as important as the numbers themselves.
Awesome. Well, Mark, it is definitely going to be interesting to see what happens after the market closes. Again, all eyes will be on this report. Again, thank you, Mark, for joining us live from the floor of SIBO.
Thanks, John.
Straight ahead, key market insights from Entry Point Wealth Management founder Chris Ward.
Now, welcome back to Market Movers Midday. Now, stocks slightly lower in midday trade and yields falling yesterday and leading support to the Treasury Department's move on long-term bond buybacks. Now, while analysts and even Secretary Scott Bessent's old mentor are calling this decision into question. Now, right now, yields sit lower than where they were before Bessent's announcement. But one thing that's for sure is that his big toolkit lit a fire under the debasements trade. Now, with precious metals and crypto spiking in the aftermath. So helping to break this down is Chris Ward, founder and portfolio manager for Entry Point Wealth Management. Chris, thanks for joining us.
Definitely. Thanks for having me, Johnny. I appreciate being here. One of the things
So,
that
Chris,
I've been
let's start
talking
with
to
the
clients.
Treasury's
Go
plan.
ahead.
So, Chris, like one of the things that a lot of people have been talking about is this Treasury plan for the long-term debt buyback. So yields are lower since that announcement. So what do you think of this move, and can it calm the bond market?
Exactly. I think this should be a big focus for what investors should be looking at, especially those that are working to, grow wealth, through their investing cycles. When you think about it, Scott Bessent, obviously the Department of Treasury, really going at odds with some of the most recent dissenters at the Fed to say, hey, we need to bring rates lower. This morning, we just saw, the PCE inflation number come out at higher than what was expected. And so whenever we see lower interest rates or an activist government policy, that's going to trigger more inflation. And really, I think what we're seeing right now is, stocks, gold, real estate, cryptocurrency, those are areas where you can go to protect your capital. And frankly, gold and Bitcoin is really just trying to get your money out of the US dollar so you can protect its value.
All right, so let's talk about the debasement trade. Gold hitting its highest
Yep.
level since May. How much of the rally has to do with debt buybacks, and how much is crypto also a part of that trade?
Yeah, I think they're both pretty much linked. I mean, as an investment manager, I take a tactical approach to building client portfolios. And when you think about it, a lot of that has to do with recognizing trends and recognizing different impacts to the market environment. Bitcoin really kind of broke out 2 or 3 weeks ago, kind of front ran this, policy change. But really the last week, gold's up 5%. In the last month or so, Bitcoin's up almost 25%. So this is a simple way for investors to think about how do you maintain, purchasing power? How do you maintain the value of your savings? Go back and look at the value of a dollar chart going back, 80 or 100 years. The government's just going to debase our currency on a consistent basis. One, they have to keep rates low because of the debt. Two, their public policy is that we're going to have only moderate inflation. But really what we've seen since the pandemic is we've seen a significant amount of inflation and purchasing power that we all feel either at the restaurant or the grocery store. And so we have to be taking an active role in making sure that our wealth is protected. And I think that making gold, and if you're comfortable with it, making Bitcoin a part of your portfolio is an excellent way to do that.
All right, Chris, so I want to turn to individual stocks now. What are some of the names that
Yeah.
you're watching currently?
Yeah, so we've at the firm level in our tactical investment approach, we've kind of shifted away from an overweight in the Magnificent Seven and even technology over the last 2 or 3 years. We've kind of shifted towards dividends, looking to maybe protect against some of the valuations that have been created and just the kind of extended tech trade. The market moves in cycles. And so one of the things that we're looking for is established companies. We're looking for good balance sheets. And really, we're looking for a little bit of protection, right? One of our names was in the news last week. We've held Merck for the entire year. We do that through an ETF, Schwab Dividend Equity. It's a major position. But when you think about our economy, when you think about where money is being spent, healthcare costs continue to rise. What we all are concerned and will spend more to make sure that we have the best available medical care accessible. So when we see a company like Merck with their vaccine announcement last week with Moderna, it's been a great holding for us. It's up significantly this year, and it also pays a dividend to our retired clients. In January, the dividend was 3.25, but given the price appreciation, it pays 2% today. And so being able to find companies that aren't necessarily attached to the growth in technology and being diversified, allows us to help our clients to kind of insulate from some of the semiconductors decline that we've seen over the last couple of weeks.
All right, Chris, and with the video posting after the close, what are investors paying attention to and how critical will this be for the AI trade?
Yeah, exactly. I think we all have exposure to NVIDIA in our portfolios, whether we like it or not. It's really incredible to see a company that over the last year, each of its earnings announcements, whether it's beaten earnings or not, the stock has sold off, 5% or so on average. And so I really feel like the company is going to double their revenue from the previous quarter last year. And there's still probably a good chance that trend continues. So I wouldn't look for the next week or two for this stock to be up, but I think over the next 1 to 2 years, you still want to have exposure to NVIDIA and kind of let this kind of AI bandwidth kind of work itself through the market, and then hopefully it's going to turn the corner and reestablish its uptrend going forward.
Definitely. And Chris, to wrap up, what's your outlook for the major averages for the rest of the year?
Yeah, I really feel like we could be at the S&P 500 around 8,000 going into year end. I like the fact that the equal weight S&P 500 is starting to broaden out. It's actually ahead on a performance basis versus the traditional market cap weighted index. And I think that's a good sign for, stocks and investors, to where if it's not just one sector leading the way, but if we can have a broad rally coming into year end, I think we can all benefit from it.
No, definitely, and it's something that we are definitely going to be eyeing on for the rest of the year. Again, Chris Ward, founder and portfolio manager for Entry Point Wealth Management. Thank you so much for joining us today.
Thank you, Johnny.
Still to come, an in-depth overview of crypto's breakout over the past week from analyst Ray Salmo.
And welcome back to Market Movers, the opening bell. Now, it's the middle of the week and it's midday, so the midweek trade, we're seeing Bitcoin at around 78,000. Now, the crypto major topping about $80,000 on Monday night and coming off its best week in over 3 years. Now, sentiment has already flipped and now on greed according to CoinMarketCap. So joining me is crypto market analyst Ray Salmon to discuss this and more. Ray, thanks for joining us today.
Thanks for having me.
All right, Ray, so crypto is waking up last week, and now bulls are eyeing an end to the bear market that began last October. So what are the factors in crypto's comeback?
Well, to be honest, Johnny, the regime has clearly shifted from sell the rips to buy the dips, and people are buying to sell now instead of selling to buy back later, right? And after a long period of low volatility and high apathy in terms of investor sentiment, the rally through 70K, through that resistance, appears to have put a final nail in the coffin of the bull market. So last week, what we saw was this historic $4.5 billion in liquidations across futures markets, alongside equally sized volumes in the Bitcoin ETFs. And that's changed the mood among investors. Over the last 5 trading sessions, the Bitcoin ETF saw $2 billion in inflows. BlackRock's IBIT, the volumes there showed the largest buy-side skew in 2 years. And the year-to-date flows into the Bitcoin ETF, the IBIT one with BlackRock, is now positive. So I think the data shows that not only was Bitcoin trading at a discount, was its volatility suppressed for a long period of time. But now sentiment and flow from the retail investor side and from the institutional investor side are now moving in tandem on the buy side.
All right, so Ray, I want to talk about Hyperliquid because we also saw a huge spike last week after the president's White House crypto gathering. And we also saw ETH and Solana outperforming Bitcoin as the rally got going. So what are you paying attention to when it comes to these ALTSs?
Well, if Trump mentions a stock or a cryptocurrency, the price tends to go up, and that's a little bit of what happened last week. But really, the crypto summit and the Trump administration calling for immediate action on the Clarity Act. A Senate floor vote is supposedly scheduled for September 15th, and if it can pass in the Senate and get to the president's desk, he is committed to signing it. So I think the price action that you saw in Ethereum and DeFi related tokens and Hyperliquid is kind of aligned with this trend of tokenization, right, being the main story. Tokenization of real world assets, tokenization of IPOs, tokenization of commodities and futures, like oil commodities, oil futures contracts, which trade over the weekends at Hyperliquid. There's been deep interest in that. So the movement in Hype token, Solana, Ethereum is kind of aligned with this hope that Clarity is going to get out of the Senate and to the president's desk and become law.
All right, so now I want to shift over to some financial market news. So ahead of the Fed Chair Kevin Warsh's Jackson Hole debut, can the Treasury kind of ease the force to the Fed to keep rates unchanged at this moment? What are we looking at here?
CME FedWatch tool, I think, has a rating of, it might be 30%. The Fed is likely to hold. PCE data, which came out today, shows that inflation it's still running above the 2% target that the Fed has. But core inflation is still kind of in line with what the expectation is. So that gives the Fed a little bit of wiggle room over the next few FOMCs to decide, is a hold on rates more appropriate? Is a rate hike more appropriate? So I think you see the market pricing that appropriately. The bigger story is that Besant backstopped the bond market by essentially committing to yield curve control and quantitative easing again. And that's the narrative that's kind of given stocks a boost. and has also given crypto a boost. So the new narrative at the moment, at least within fintech and crypto, is that the debasement trade is back because yield curve control is likely to spike inflation and diminish the purchasing power of the dollar. So it'll be interesting to see how Fed Chair Warsh addresses what the U.S. Treasury is doing and whether or not there's a conflict between the Treasury and the Fed now in terms of what their objectives are.
All right, so Ray, I want to talk to you about what variables are you watching across both the DeFi and the TradeFi markets moving in the near term?
Clarity, obviously, if that can become law, then it'll make it easier for B2C and B2B products and services to launch and sandbox in the United States between TradFi, crypto, tokenization, integration of blockchain into all of TradFi. So I think that's still the main linchpin that everyone's waiting for. Beyond that, do capital flows into crypto? Are we going to see kind of like the end of the AI trade, right? And more sustainable capital flows into crypto? And does that lift crypto prices sustainably over the long term? Or will Anthropic file its S1 this week and IPO in September, and all the focus is back again on the stock markets and equities, similar to what we saw with the SpaceX trade, where basically all the money was pulled out of crypto and went into the AI trade, right? So I think that's something that investors should keep their mind on.
No, it's definitely something that I think everyone will be looking at. Again, thank you so much for joining us, Ray. Appreciate your time.
Thanks for having me.
And coming up next, a final look ahead at the markets. Don't go away. All right, so let's take a final look at the markets. Stocks are on the lower end this morning. You can see that the Dow is down roughly about 0.25%, down about 150 points. And when we look at the NASDAQ, it is also down almost 100 points at around 97.81 this morning. And when we look at the S&P 500, the S&P 500 down almost 0.1%, down about 11 points this morning. And when we look at the New York NYSE Composite Index, we know that it is down in the red, roughly about 13 points this morning. And as for market moving news today, we know that all eyes will be on NVIDIA's Q2 earnings after the close. Shares are lower ahead of the report. And of course, September high rates odds remain right at around 40%, slightly after the hotter than expected July PCE on a yearly basis. Again, I'm Johnny Fernandez, and thank you guys so much for watching this midday edition of Market Movers. Have a great day.